All right, now we get to the really fun part, all right? So, are you tired of those sky-high insurance rates?
There we go.
I was, I opted out a while ago. Who wants to discover a new choice? Or to be able to have a choice? How about smart coverage without all the sticker shock? Well, today, we are going to learn how to start saving instantly with REASURE. Let me introduce Dr. Shields.
Thank you. Let me just say, I've been to a lot of REIA groups around the country and Southeast. This is one of the most, if not the best, well-run group. Absolutely. Give her a hand. Give the board a hand. So you can make me introduce myself?
No, I just did. That way I know I got it right.
All right. What she didn't tell you is two things. Like Anna, I used to be past president of National REIA, and I'm still involved with National REIA in some capacity. The other thing she didn't tell you is I'm a Baptist minister.
Woohoo!
Which means anytime I get in front of a crowd, guess what Baptist ministers do?
Preach.
Well, they preach, but before they preach, they take up an offering. So let's don't be sitting on them walls. I see somebody squirming on their wallet a little bit back there. Let's don't be doing that. We're going to be talking about insurance tonight, and what I want to leave you with is a couple of takeaways when it's all said and done. Because I could stand up here and bore you with all the logistical details and stuff like that, and we'll go over a little bit of that. But REASURE is the marketing arm for National REIA, the insurance marketing arm. And we support the local REIAs nationwide, and that's who we market to exclusively. You have to be a member of one of the local REIAs in order to buy our insurance. And that's one of the reasons why we can do it so low. Back in January, I had to sign a new contract with our underwriter, Millennial Specialty Insurance, and you may be familiar with them. And part of what was on there was a rate sheet. It had to approve the rate sheet that came from the Woods of London. Each county in each state has a different tier. There's tier 1, tier 2, and tier 3. Tier 1 is the riskiest, tier 2 is middle risk, tier 3 is the best risk for an insurer, okay? All of Ohio is tier 3, best risk.
Oh, really? Oh, that's good.
Not only that, but there's only one other county in the entire country that has lower rates than right here in Toledo, Ohio.
Really?
Okay? In my home state of North Carolina, a tier 3 is about 50–60% higher per thousand, per $1,000. Your rate here is somewhere in your neighborhood for a single family of about 46 cents per thousand for a single family. In other places, it's as high as $1.55. So you've got one of the best opportunities here to be insured, you know. We cover 49 states, we don't cover New York. Does anybody?
Yeah. Don't blame you.
Can anybody guess why?
New York first one count?
New York doesn't even invest in New York. Exactly. Absolutely. No, they're just a little difficult to deal with as an insurance company, okay? That's the insurance commissioner, excuse me. They're a little bit difficult. And so we don't rep in New York. And a lot of companies opt out of New York, you know. But we're nationwide. So if you live here in Ohio, how many of you have invested in other states? Oh, a bunch of you. So you can get insured with us in other states. No problem at all. It's an online service because I like to sleep at night. So you can go, you don't call me at night. You just go online, and you fill the things out, and you can get an instant quote and all. And you can go to our website, which is www.reassure.com. So what we're gonna, in our millennial, on this last slide here, millennial specialty insurance, that's our main carrier for property and casualty insurance. And what we have there is residential property. We don't do commercial properties. And we do single family, we do duplexes, triplexes, we do quads. I had a gentleman that was here earlier tonight asked about an apartment complex. We do not do them. And that's why we can keep our rates low, is because we focus on that market. We specialize in that, and that's why we can keep our rates low. And you guys got the best rate. This is my fourth time up here. Usually I come to the trade shows, and I'm just tickled to see all y'all. Tonight we're gonna talk about dwelling insurance a little bit. We're gonna talk about one of the aspects there. I want you to come away from tonight knowing about, because it impacts your insurance. Sometimes your agent is not gonna tell you everything you need to know. Because what you do not want to have a claim and find out that you're not covered, or it's not exactly like you thought it was gonna be. Because you know who you deal with when you have a claim? You don't deal with the agent that sold you the insurance. You deal with the adjuster. And the adjuster says, well, I don't know what he told you, but this is the way this thing reads. So I want you to be educated. There's one specific part that's not only beneficial for your real estate investment properties, but it's also beneficial for your home property too. Now, we don't do homes, we don't do cars, we don't do dogs and cats, we don't do any of that stuff. We focus on real estate investors for rehabbing and landlords. It's a one policy that fits both. You don't have to rehab a house and then if you decide to keep it and put tenants in, you don't have to get a different policy from us, because our policy has builder's risk built in. The other thing we're gonna do a little bit briefly tonight, and if some of the tech works, we'll get to see some audio and visual, some TV clips. Flood insurance. Most of you know about flood insurance in that is the house I'm buying in a flood zone. And we'll talk about that. And typically people do not buy flood insurance if they're not in a flood zone. Because if you go to mortgage a property, if you're in a flood zone, the lender's gonna do what? He's gonna require you to have flood insurance, depending on where you're at. But did you know you can buy flood insurance even if you're not in a flood zone? A lot of people don't know that. And we'll talk a little bit about flood insurance. And we just had this, what's in the news now, this terrible thing that happened in Texas, right? Floods happen in all kinds of different places for all kinds of different reasons. And then we're gonna talk about one aspect of renter's insurance. How many of you have rental property? How many of you make sure that your renter, your tenant, your resident has insurance coverage? Not quite as many hands. Not quite as many hands. You need to check on that. So we'll talk a little bit about that. So here's what we do. In our dwelling policies, okay, they protect you against these perils: fire, smoke, lightning, windstorm or hail, even an explosion. In Charlotte, just recently, we had an explosion in the house. The guy had a meth lab, you know, and he kind of blew up. My friend Danny, who came with me tonight, up here, we're just kind of making a road trip, a boys trip out of it. His daughter's next door neighbor, the garage blew up, and you know why the garage blew up? Lithium battery on a golf cart.
Oh, boy.
People aren't living in the house anymore. Last time I was down by there was big dumpsters and all. How many of you ever thought about Your lithium batteries be a problem.
No, we have never known.
They can be a problem. They can be a problem. So we insure against these things. Now, one thing about windstorm or hail, how many of you have properties on the coast? Okay, here's what happens on the coast. When a hurricane's coming, don't call me for insurance. Okay? When we get notice, we flag those areas, and you have to have insurance before that. You have to have insurance, flood insurance, at least a minimum of 30 days before the flood. Okay? So there's things that you need to be aware of. Here's what's included in our coverages. Loss of rent, okay? How many of you ever had to do repairs because something happened, the tenant had a fire in the kitchen and he had to move out and you lost rents for a couple of months? Well, we cover that. We'll pay you that loss of rent. In order to do that, when you fill out the information online on our website, you have to tell us how much the rent is, okay? And basically it's 10 cents annually per $100 of annual rental income. So it's really cheap when you think about it. It's really cheap and it covers that. Debris removal, okay? We cover debris removal. You know, if you have a fire, you have a flood, you have something, we cover the debris removal for that. You know, and we'll talk about what a flood actually is in a few minutes. Builder's risk. Some of you, when you rehab, it's a pretty major construction sometimes. You'll tear out a lot of inside walls and that sort of thing. Well, our policy includes builder's risk, okay? It includes builder's risk, so you don't have to worry about that. You don't have to get a separate policy. Okay, so we have a builder's risk endorsement there. And then water backup and sump discharge, you can get that as an add-on for $75 a year, okay, per property that you have with us. And that's, how many of you have ever had a backup sewer or water? It just happened in Toledo not too long ago, didn't it?
Yeah, I've got one underneath the concrete ranch right now.
Yeah. Water is the substance of life, but at the same time, it's uncontrollable sometimes, right? Uncontrollable. So, what I want to talk to you about when it comes to dwelling insurance is actual cash value versus replacement cash value. Now, a lot of people don't really understand the difference, okay? One of the things that an insurance agent, or even on our website, you have to decide, am I gonna take actual cash insurance, or am I gonna take replacement? And most people say, well, I'm all in for replacement. So it actually doesn't even cost any more. There's no difference in the rate, okay? What's the difference is what happens when there's a claim. When there's a claim, it affects how much money you're gonna get. But it's even more than that. Because you think I've got replacement cost coverage. I'm good to go. Place burns down, they'll replace it. You think that's right? There's a maybe there. And here's the maybe. Answer that call right now. It's a buyer or seller right there. Don't lose that deal. So here's how actual cash value is done. It's calculated by determining the replacement cost value and subtracting the depreciation. Okay? Now depreciation's got to do with maybe how many years it's been involved. Let's say you have a hailstorm, and your roof gets hit. You know, you need a new replacement roof or something. They're gonna look at, well, it costs $15,000 to replace the roof, but it's been 25 years, so your roof's really not worth a whole lot. You know, but they're gonna figure something out, and you're gonna get some money. And then there's some other things, depending on the deal, they're gonna depreciate it. And that's the number you're gonna get, because you're gonna get the actual value. They're gonna depreciate it, just like, so you'll know what the value is. There's 2 years life left on the roof, you're gonna get what's 2 years worth. Now, replacement cost value operates a little bit differently. It's calculated by determining the replacement cost, and that equals replacement cost value. This is what you'll get. But it's not quite that simple. Does anybody know what the 80% rule is? Alice, you know the 80% rule. Don't tell them then.
Okay.
Let me tell them, Alice, okay? Here's the 80% rule. You have to have, and this is even in your home, your homeowner's insurance. You have to have your home insured for at least 80% of the replacement cost value in order to receive full replacement cost. Okay? So if you've got a property that you've left grossly underinsured for years, and it's like, hey, I got an insurance replacement cost value, you know, they got it on the books at 20,000, but it's worth 150. You're not gonna get 150 for it. That's what today's replacement is. And here's how that works. Okay? Here's how that works. So your dwelling is insured for $60,000. Okay? I don't think you can find a $60,000 house anymore.
In Toledo.
You can in Toledo, okay. Okay. Average home in Charlotte now is probably about $400,000. I mean, it's you, and we're talking 1,300 square feet. Yeah, so it's with different markets or your dwelling is insured for $60,000. So you have a kitchen fire that results in a $20,000 deal because big kitchen fire took out the walls, took out all the appliances, took out a whole bunch of stuff. Insurance reimbursement for that loss is only going to be $15,000 because the building itself was worth $100,000. You only had it insured for 60. That's 60%. So the formula there, look at the formula. 60,000 divided by 80,000. Okay, 80,000 would be 80% of the $100,000. Okay, is 75%. So then you figure your $20,000 loss times 75%, and you're only going to get $15,000. It works the same way on your personal residence. If you have a home that's going to be valued at $200,000, and you have it insured for $100,000, well, 80% is $160,000. So you're grossly underinsured, and you're not going to get total replacement value. So write this down. That is one takeaway I want you to have tonight, and that is the 80% rule on replacement cost value. It does you no good to try to save a few pennies on your insurance policy if you're not properly insured. Okay? Thank you, Alice, for sharing that with us. So, how many of you in here now know what the 80% rule is? Okay, you didn't raise your hand. Do I need to go over it again? Okay, you're good. All right. Okay. So, 80% rule is a big deal. It's a big deal. And guess who's going to tell you that? Your agent's not going to tell you that. That's why we're educating you here about that. It's not even going to really tell you about it on our website, unfortunately. Claims adjuster's going to tell you about it when he comes out there, right? And those guys, have you ever had a claims adjuster? They don't smile, do they?
No.
They absolutely don't smile. And they don't care if you cry. They have no empathy. Okay. I know one. George Skiddish used to be a claims adjuster. And
I can believe that.
you can believe that. Okay. Good. All right. Next thing I want to talk about is flood insurance. Okay. How many of you have a property with flood insurance? Okay. Were you required to have it, or you just decided to have it? Required to have it. Okay.
Lake Erie.
Huh?
Lake Erie.
Lake Erie, okay, yeah, y'all just had some floods, you know. So, but all the properties around here, I don't let them know like that flood insurance, just certain areas, okay?
Yeah.
Well, one of the things about flood insurance is kind of like other insurance. How many of you love insurance? I'm not seeing any hands raised. You need it, you like it, thank you. Matthew, right? You go by Matt or Matthew? Matthew, okay, formal guy. All right. So, one of the things, and this, I'm not charging y'all for this tonight. This part I'm gonna give you for free, okay? Absolutely, I'm not charging at all, but this is free, and I do this one in my sermons too. I'll step aside and I'll say, this is for free, you know, this is a little bit extra, you know, that you're gonna get. So, we don't really like insurance. We don't like insurance men. That's why I usually carry a gun, can't put it up here. Okay. We don't like it. It's something we have to deal with. But think about this. Insurance is one of the things that drives the economic engine of this country. If you couldn't buy insurance on a house, how much would you pay for it? If you couldn't buy insurance on your car, would you buy that $75,000 car, or would you buy that $5,000? So insurance is part of what runs this country, and it's been doing this since day one. Insurance has been in place since day one. Well, back to flood insurance. So you look at that picture there, that's actually a picture in, I think, Charlotte. Along with it. So the Flood Insurance Act of 1994, y'all can read, but it says a loan cannot be made on a property or a mobile home that's located in the flood zone area unless what? It's got flood insurance, right? It's got to be at least the principal value. It's got the loan's got to be covered. All right. We're going to try to do a couple of things. It may not work, because I got a couple of links up here I'm gonna hit, but Michael assured me to blame him, it would be his fault if it didn't work. Okay, so we, okay. All right, there it is, find it with the hand there. Here's these things never work exactly like you want them to, but that's a flood in Charlotte. I guess that's just a picture. Here we go. This is up in the mountains. Let's see here.
Now to our team coverage, and we begin in Alexander County. More than 30 people had to be rescued from a flooded campground. More than 3 are still missing, including a 1-year-old. At the Hidden Thai Family Campground that sits along the South Yadkin River, 3 deaths are being reported in the county, 2 in the campground, and 1 from a crash at a bridge. WCNC Charlotte's Brandon Goldner joins us live. Brandon, what's the latest on the search efforts there?
Right now, the water has receded from what the original level was. We have a fire truck right over here. Some of the damage that has been left over as a result. They are still searching for that 2 adults and the 1 child, the 1-year-old right now. They have been waiting for the water to recede for some time because of the boats through the shallow water. Take a look at this video from earlier, what we saw when the water levels were particularly high. One of the problems is they haven't been able to get into many of the campers because they were underwater originally. Now they're receding. It may give them a better opportunity to do that right now. Sheriff Chris Bowman says this happened around 5:30 in the morning when they started getting the reports of the flooding, and they were not expecting the rain to be this heavy this quickly.
This is a very unfortunate thing that's happened in Alexander County in many, many years that we've had a storm like this has come through this quick and gave us this much water at one time.
Okay. So, we'll actually see another one here, let's see, these may be pictures. I want you to know that floods are real. Okay? I know you know that, but this is in downtown Charlotte. Okay? Charlotte sits 750 feet above sea level. But there's a major river that's not very far away, that's on the western edge of the city. And there's a lot of creeks and that sort of thing. Road washed out. Anybody ever seen a road washed out? Gotta be careful on these things. These things are real. And if you think only a flood happens in a flood zone, you're wrong, because they happen all over the place, okay? And then here's realty company's got an ad. I think you said you're a realtor. So you tell everybody about flood zones and all that good stuff. That's a guy trying to get out of the water there, you know. So there's all kinds of different things that happen in flood zones, you know. That's another, let's see here. This was a little closer to home for you guys. Technology ought to be a little easier than this.
Toledo Jeep Fest rolls into town August 1st through the 3rd, celebrating the history of the Jeep, right in the tent.
Oh, shoot.
Next month.
All right. Well, I'm just gonna tell you what happened. You probably know what happened. You guys had floods, what, last 2 months or something? Now, it came from the river, but the river being fed by Lake Erie, is that how that happens? So, it's not fun. It's not fun. So what constitutes, oh, here you go right here. I want you to have this. Let me make sure. Go back. Lucas County Flood Information Page. Did y'all know you had one of those? You are in Lucas County, right?
Yeah.
Okay. There's your flood information page. Okay? And it looks like it's, Lucas County flooding. You can go on there and see, and it talks about the different things, flash floods, flood watches. You can get that information and all. So you actually have your county's actually talks about that. In Charlotte, we don't have a major lake like that, like Erie, we got some man-made lakes. I don't know that we have a flood page in Charlotte, you know, but we still do have floods because the rivers overflow because we got power companies that dammed it up and they have to do that sort of thing, they have to monitor and figure out what to do on those things. So you got a page there that'll give you some information right here in Lucas County about floods. Also, FEMA. You heard of FEMA?
Yeah.
You like FEMA?
No.
No. Well, when it comes to flood insurance, there's two ways you can get it. You can get it through a private insurance company. Okay? And if you're looking on our site and you're inputting a property to get it, there's a little tab there that you can hit for flood insurance, and it takes you to one of our sister companies that will provide you with the flood insurance information and a quote, okay? So they'll give you a quote on that. The other thing is you can go to the national site, okay? So there is a flood, and look at that, flooding happens everywhere. You can go to the FEMA site, and there's a link on there to the national flood coverage. And you can hit on that link and you can get a quote for flood coverage from them. So, I mean, very important thing. I'm sitting here watching the news the last couple of days, and the thing in Texas, difficult to, to avoid that thing. Things happen. As a real estate investor, you want to save your investment. You want to save your investment. You don't want to be surprised. So here's what the National Flood Insurance does. Okay? One of the things I want you to know is a flood doesn't necessarily have to be over the whole county. It doesn't have to be what we saw on the television there over the campgrounds. A general and temporary condition of partial or complete inundation. I don't know if I can say that word right. I didn't major in English. Of 2 or more acres. Well, two acres isn't all that big, is it? 2 or more acres, at least one of which is the policyholder's property. Okay? 2 or more acres. I used to live in the county right that butts up to Charlotte, and they had made almost everybody in my little town that I was in have an acre lot. Couldn't have anything less than an acre lot. Okay, so that would just be 2 properties. But here's the thing: it's an overflow of inland or tidal waters. That could come from a rain, from a creek. Okay, whatever. Unusual and rapid accumulation or runoff of surface waters from any source. Okay? A mud flow that you have that breaks loose from a hill or something. Remember, it's got to cover 2 acres. So if it comes rushing into your house and you're the only house and your neighbors are driving, flood insurance is not going to cover that. To be called a flood, it's got to be over 2 acres. Okay?
Does that count if your neighbors put a wall around the house?
If your neighbors put a wall around their house,
Yeah.
what do you mean a wall?
You didn't see that?
No. Retaining wall?
The thing that broke into the
Oh, a levee?
Louisiana.
A levee? Now, I don't know about that. It seems like there'd be some liability on the other side of that right there. Even collapse of land by a seashore or something like that happens. So that can also happen. So our flood coverage, underwritten by Lloyd's of London, did you ever hear of those people?
Yeah.
Do you know how they got started?
Nope.
Who knows how they got started? Well, Lloyd's of London insured ships coming to different parts of the world, okay? And what they would do is they would say, Captain so-and-so is gonna take a ship of these goods, and he's gonna sail to Boston, Massachusetts from London, England, okay? And who wants to help insure that load? And what they would do is they'd go up, there'd be a board, and they'd go up to that board and they'd write their name and say, well, I'm good for $500. Of course, it was a long time ago when they started. Or I'm good for whatever. And they'd just write their name on that board. It's actually in a bar. Okay, tavern, I guess. Is what they, how many go to taverns? We got bars now, right? We don't go to taverns. It's actually in a tavern. And they'd write their name. Okay? They'd write their name and say, I'm good for this much of the risk. So they were insuring the risk. Well, Lloyd still kind of operates the same way. They have people that take different parts of that sort of thing. Our insurance company, Millennial Specialty, that underwrites us, they do the same thing. They go to Lloyd's and people sign up for the risk. And Lloyd's will say, well, we'll sign it up, but we gotta have these parameters, you know. And that's how the insurance is written a lot of times. It's not, before it ever gets to you, there's a lot of thought that goes into it. Our policy coverage goes by the National Flood Insurance Program standards. Coverage limits are $250,000. Residential, $500,000 for commercial. Okay, That's the limit. Now, do you know what part of the population of the United States lives in coastal areas? 40? More like 60 to 70% of the whole country lives on the coast. You know, what happens on the coast? Hurricanes, storms, stuff like that. And you read about what happened. You read about what? They don't have insurance. You know, they don't have insurance. Flood zones. We cover all zones, different prices for different zones. Some communities are non-participating communities, and what that means is certain communities require certain coverages that others don't. And if you have a participating community, then sometimes your flood coverage is better and it's cheaper, and that's because what they do is, as participating, they have certain guidelines when they build, will let you build, and where they won't let you build. But we even cover non-participating communities as long as they fall in the National Flood Insurance Program guideline. And we can also get excess flood coverage for you if you need it. You know, one of the things to be sure, I'm sure every one of you does this. When you buy a piece of property, you check the 100-year flood zone, right? Line? You check that? You know what that is? Anna knows what that is. When you go to buy a property, you need to look and see where the 100-year flood line is, and that's the line where water's come to as high as it's come in the last 100 years. There's also a 500-year flood line that you can look at and see how far up water came in the last 500 years. Okay? Real estate rule number 1. I think this is right, Brenda. Get off that phone. I'm talking. Goodness gracious, who we talking? Who we talking to? You are. She is doing it. She's doing her research right here. Let's give her a hand. All right. Then I didn't mean to embarrass you like that. Okay, where was I? Do you remember where I was? I had to mention
500 year.
the 100-year and the 500-year. So as a realtor, do you advise people to buy on the low side of the street or the high side of the street? The high side of the street, right? Is that because of water, or is it because it just looks better sitting over there on top? Huh? It's all the same. It is not all the same. It is not all the same where I'm from. Because the land rolls. The land continues to roll. You know? So, renter's insurance. Okay, we talked about flood. What I want you to know about flood is it can happen anywhere. You can buy insurance even if it's not in the flood zone, but you need to check. You need to check and see, am I in the 100-year line? How close I am to that?
How do you check that?
There's maps, you can check on that. In fact, your real estate map, top of the map, they should be able to pull that for you when they pull the property and tell you that. Okay? But you can see that. Yes, sir.
I just wanted to throw out there that I was involved in this with the 100-year thing, and I had a property, and they changed it from the time I bought it several years later, and all of a sudden it was in a flood zone where it wasn't. Nothing changed but the government thing. So they suggested I go to the FEMA because it was the national thing.
Right.
It was $6,000 a year for just the flooded coverage. So I went to your Lloyd's of London, and it's $2,400.
Wow.
Great difference in it, but I wouldn't have known if I would have just
Well,
gone.
thank you. What's your name? I want a testimonial there.
Rick Crawford.
Rick
Crawford. Yeah.
Rick Crawford. Thank you, Rick. Yes, sir. You have a question?
After Katrina, they did expand all these flood zones. And that's when they're catching a lot more people to pay for this. We're still paying for Katrina. Come back down to it.
We're paying for everything for everybody.
Yeah.
If you haven't figured that out yet, it's not the government's money, it's our money.
That's right.
It's our money. It's our money. So if you got insurance, you got the proper insurance, you don't have to wait on FEMA to get there. Okay? You don't have to wait to think. Now, renter's insurance. How many of you require renter's insurance? Whoa. How many of you have properties, tenants, and don't require renter's insurance? Wow. Now you see, you got your flood insurance. You got your flood insurance, but you're not gonna make them insure, right?
Well, my renters are low-end renters and they struggle to pay anything.
Okay.
Now, can you,
All the more reason, exactly, all the more reason why they need it. It's not very expensive. It's not very expensive sometimes.
include it in your rent, put yourself in.
Okay. Having your tenants buy their liability policies grants you protection for many incidents that can occur on the property. So in other words, here's what happens. Part of renter's insurance is twofold. Number one, it protects your contents, but it also protects you because there's liability insurance there. Typically a minimum of $100,000. Most of you have more than that on your own personal residence or whatever. So if your tenant, resident was to invite somebody on their property, and for whatever reason, there was an accident there, and they wanted to sue, or whatever, and they don't have insurance. Well, who's the rich guy in this equation?
The landlord.
The landlord is the rich guy, right? Would you take that Michigan hat off? I don't care. Would you just do me one favor and take that Michigan hat off? Turn it around, do something. I've been staring at that gold M for I don't know how long. You people live in Ohio, well, y'all let him wear that hat?
He's a Michigander. We're on the borderline.
Border, okay, all right. Okay. All right, so this protects your assets when they do that. One of the things we're working on, and it's probably not gonna come until fourth quarter, we're working on a program with a provider that will allow you to buy renter's insurance across multiple properties. And maybe just be able to rent up their rent as little as $18 to $20 a month to cover it. Okay? And that way, if they move in and they move out, you're covered. Does that sound like something you might be interested in?
Yeah.
Okay? Huh? What did you say? It was a great selling point, man? Yeah. Say that again. It's a great selling point. Okay. Great. Absolutely. There'd be a little bit of content coverage, but most of it would be liability coverage for the thing. But it can protect you against things that happen. You know, you try to do your best to get people in there and all, but I've had properties before and I've mismanaged them. Because you know what? Sometimes if you have a big heart, and I'm sure as a landlord, you ain't in it to get rich. You're in it to scrape by. You think you're gonna get rich until you have that first property. And then you find out, you know, this is a little bit harder than I thought it was, but it's worth it because I'm providing affordable housing for people that could not afford it otherwise. Okay? And so they get laid on. J.C. Underwood, who used to be my mentor, good friend of Anna's and a lot of others.
He's got an accent just like yours.
He's got an accent like mine. That's because he's from the same part of the world. Okay? He told me one thing about being a landlord. And if you can't do this, you need to quit being a landlord. If you can't evict your mother from a property on Christmas Eve, you have no business at all being a landlord. Okay? Okay? So, you know, let me tell you about this thing. What's an additional insured? Do you know what additional insured is on a policy? A couple people know what that is. That is a person who also has a vested interest in the policy, in what's going on. So when your renter has a rental insurance policy, okay? And that's one reason why we're thinking about rolling this thing out blanket, is because you'll automatically be an additional insured, okay? But if they have a policy, I require them to have renter's insurance. $100,000 liability, $20,000 of contents, or whatever contents they think they need. You need to ask them to put you on as an additional insured. Now, and make sure that happens, because there's two things that happen. Number one, if they go and cancel that policy, after they show you the policy, and they go and cancel it 30 days later, I'll show him, I moved in. You'll get notified, the policy's been canceled. The other thing, and probably the more important thing, is there's benefits to you. Because here's what happens. If an additional party, what's the purpose? If there's a liability claim, I'm not reading these whole things, against the tenant, the landlord could be involved in the lawsuit, okay? And this allows you to access their attorney, okay? A lot of times what insurance does is it don't insure you, it just buys a better lawyer than the other guy has. It buys better. How many of you have an umbrella policy as part of your, or personal catastrophe policy? You got home? How many of you got home insurance? How many of you got auto insurance? You wrap that with a personal catastrophe policy? Okay, here's why. Here's why you gotta have that. How many of you got children? How many of you got children that drive? Okay. They have a wreck, they kill somebody. Who's got the money? Mom and daddy's got the money. They got in your car, they're on your policy, and your limits are 300,000? You think somebody's gonna settle for 300,000? No, they got for like $1 million or something. Personal catastrophe insurance is one of the cheapest insurance policies you can get. Now here's the thing. $1 million usually costs you somewhere in the $80 to $120 range a year. Okay, that's cheap. Something like that. What it does, and basically you have $1,000 retention on that, self-insured on that. All right. But do you think they're gonna write a check for $1 million? No, they're not gonna do that. Their big fancy lawyer's gonna work on your behalf and get that settlement down to what they can live with, and you just have to write that check for $1,000. Plus take away the keys to the car. Okay? Now, the thing about a personal catastrophe policy, and this is extra, I'm not charging for this part, it's my private. The thing about that is, if anybody ever played Monopoly before, what is that one card you wanna have? Get out of jail free card. That's what that is. It's a get out of jail free card. In Monopoly, how many times can you use it?
Endless.
One time.
If you get more than one, you can use it.
Well, the card, you can use the card one time. That's what you get with a umbrella policy. You can use that thing one time. They can make sure that kid's not on your policy. So you want to be an additional insured. Okay, because that gives you protection, that gives you rights. When I used to work for a telecommunications company, I used to drive my personal vehicle. Anybody ever drive your personal vehicle for a job? Well, you're real, but I mean, you work for somebody else. You're an employee for somebody else. Salesman. How many of you were a salesman at one point in time? And you drove your car and you worked for Board Warner or somebody? Got one back there in the back. Did they make you be, Board Warner be an additional insured on your personal policy? They should have. My company made me put them on there. as an additional insured. Because if I had an accident while I was working for them, even though I was driving my personal car, they could be sued. Because I'm an employee of that company. Okay, there's all kinds of things out there. You want to be properly insured. The landlord can then use the insurance companies, their insurance company, not yours, but theirs, rather than hire one of your own. Renters policies are not all the same, so you need to look into that and make sure that's what, and hopefully we'll get a good one out for you before long. Renters insurance, package coverage for physical damage to personal property. Okay, that's even I mean, that's if they beat on the walls, and you can make their insurance company pay for some of the claims you have against them. Okay? No, but all your guys, they leave the property in pristine condition, right? My father-in-law owned a condo one time, and he had the best tenants whatsoever. And I don't know why he sold the property, because his brother and sister lived there, and they used to clean the grout with old toothbrushes. Now, has anybody had tenants like that? Raise your hand.
Yes.
Oh, Alice has one. You vet them people. Good.
Been there 30 years almost.
Yeah. We no longer offer this coverage, but you can get it, but I want you to have it. We're gonna offer a blanket thing probably at the end of the fourth quarter this year. And you'll be hearing more about it when we do. I hate to tell you it's coming, but I'm gonna let you know that. But here's the thing. I want you to make a promise that you're gonna check your renters out, get them to have insurance. If you don't, you're on the hook. And everything's fine and dandy till you get that call. Till you get that call. Absolutely. 3 takeaways. 80% rule. Who can tell me what that is? We talked about it. This is class.
Insurance for 80% of your replacement cost on your property.
Absolutely. Insurance for 80% of the replacement cost on the property, okay? Gotta have that, gotta have that. Write that down, that's a big takeaway, because only 1 or 2 raised their hand, even knew what it was. Flood insurance, evaluate your risk, look at the alternatives, okay? Think about it, it may be expensive. Think about how expensive the property is, okay? Decide what risk you're willing to take on that, okay? And the third thing I want you to be aware of is the additional insured. You want your renters to be insured, and you want to be the additional insured on their property. Full stop. Okay? So, here's our website. REASURE.com. You can go in there and get the property casualty quotes. There's actually a couple of other things. We actually do life insurance. Okay? I know you hate life insurance, don't you? You hate life insurance, but let me tell you something. How many of you have multiple properties? How many of you have a mortgage on the properties? Okay? How many of you have a spouse? Okay? If you die, is she gonna have enough insurance to be able to keep those properties, or is she gonna have to do a fire sale? Okay? How many of you know, ever heard of a team called Miami Dolphins?
Oh, yeah.
Okay? There was and you ever heard of a magazine called Forbes magazine? I'm gonna end up here, but I'm really not gonna preach a sermon tonight. And I'm not gonna pass the hat, okay? They're giving me Alice is giving me the thing over there. We're gonna do questions in just a second. Joe Robbie, you remember hearing about Joe Robbie Stadium? Joe Robbie, Miami Dolphins? Joe Robbie dies. He doesn't have life insurance. His heirs had to sell that team and the stadium for pennies on the dollar, because here's what happens in a deal like that. There's a thing called estate taxes, and they have to be settled within 9 months. And so the sharks start searching, you know. So the Joe Robbie family no longer has anything to do with the Miami Dolphins or Joe Robbie Stadium. I think they even renamed it now, I'm not sure. Malcolm Forbes was the owner of Forbes magazine. Many of you probably have read Forbes magazine, like the articles in there. He had 2 sons, one of which is Stephen Forbes, which you've probably seen on television before. And Malcolm used to ride motorcycles and all into his 80s. Malcolm Forbes died, and he had over the years purchased $100 million in life insurance. So what did his 2 boys do? They used that insurance to pay the estate taxes and all that mess. They still own the magazine. They still own that publishing platform. So think about that. I can do a whole 2 hours on that if you'd like, or would you rather go eat? All right, okay. Oh, one other thing, just kind of sum it up. Y'all probably seen this before.
Hi, I'm Lori. Hi, and I'm Lori. Today I'll be telling you about all the magical benefits offered to National REIA members by our partner, Millennial Specialty Insurance. MSI's Investor Insurance is designed to maximize your cash flow by covering all sorts of unfortunate situations, like windstorms, vandalism, and theft. What? I said, like windstorms, vandalism, and theft. Oh, and also malicious mischief. I see. Wait, what? Let's go inside. MSI's insurance benefits cover the inside of your properties too. Your tenant's personal property is insured on or off premises. Oh, I don't currently have tenants here. MSI covers physical damage to personal property and tenant liability. But tenant liability. See, you have tenants. But if you didn't, they cover vacant property too. Oh, and they also offer additional coverage providing a $3,000 living expense. Here you go, my good man. Go nuts. Oops, forgot something outside. MSI also offers flood insurance, available in all zones up to $250,000. Did you say flood? All zones! Thanks, Wizard Lori. Don't thank me. Thank Millennial Specialty Insurance, your partner as a member of National REIA. But it doesn't end there. There's builder's risk coverage for new construction. There's no delay from underwriting or inspections. Just enter your property online and ask me how soon it's covered. How soon? Instantly. And there's round-the-clock electronic certificate delivery. Oops, already gave you a clock. And outstanding claims management service. The folks at MSI are always friendly and helpful. Hey, Lord. So, if you're a National REIA member, insurance should be one of the last things you worry about. Thanks to our friends at Millennial Specialty Insurance. So visit nationalrea.org to become a member and receive all these magical benefits.
All right. Well, you don't have to go to nationalrea.org to become a member. As a member of Toledo REIA, you are automatically a member of National REIA. Okay? Absolutely. I got time for a few questions.
Yes, I have a question.
This gentleman that still has his hair back in the back. I wish I had my hair.
What's it cost for $1 million life insurance policy at age 70 or over?
Too much, more than you can afford.
How much a month?
I don't know. Term, whole life? Term, I don't know. I'll quote off the top of my head.
I mean,
When people ask me to give a ballpark, you know what my answer is? Give me a ballpark quote. is $60 million. And that's because the last ballpark I knew that was built was it cost $60 million to build that ballpark. I wish I could. If you'll give me your name and or send me the information, we'll get you a quote.
That's
Okay?
the best way to pay your taxes at the end of your life.
Exactly.
Yep.
Exactly. Exactly.
Anybody
Yeah.
else?
Yeah. Give me your information, sir, and we'll get somebody in touch with you. All right? Anybody else have a question, or y'all just want to get out of here?
Or you did such a good job
Well,
answering all of it.
well, thank y'all very much. I enjoyed being here. Hopefully I'll be able to invite you back at some point in time. You've got a good crowd, and, next time I think we will pass the hat. Y'all think so. Thank you.